Good morning, everybody. Hello, and welcome back once again to your Bitcoin economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm Mauricio Di Bartolomeo, co-founder of Lenin, and today is Tuesday, April the 12th. We have an excellent episode for you this week, as always. In today's show, we're going to talk about U.S. inflation. We just got a fresh reading out of the CPI this morning, and that hit 8.5%. We're going to talk about that and how that may inform the Fed's next move in their upcoming meeting in May. We are also going to talk about Bitcoin prices, which briefly broke below $40,000, and the correlation with Bitcoin and equities has been increasing as of recently. We're going to chat a bit about why that is important as we head into the weeks and months ahead. We're also going to cover what's ahead for the week in terms of announcements and economic data and a few other things in the blog. So grab your coffees. It's going to be a great one. And starting as we usually do with Bitcoin, we see that over the past, call it 2 weeks or 10 days, the last week and the 2 trading days into the session this week, we've seen Bitcoin drop around 13.7% since essentially April 4th. Last week, we saw a drop of 9.20%. So far this week, we're down another 5%, so approximately 14% overall. We saw that last week, it basically failed. This week, essentially, the big support line that we had, or the support line that we had around the $42,000 mark, broke down, and we've seen Bitcoin move lower since then. Essentially, and Bitcoin dropping has also been dragging down the majority of crypto markets. And there was, as you know, there was a big inflation report that came out this morning out of the US, and most market participants were already braced for a pretty hot inflation report. We actually saw the Biden administration come out last night, a few days ago actually, and say that they were expecting a very high inflation reading in this week, and we got that for sure. Now, both equity markets and Bitcoin started the week in selling territory, and interestingly here to note, the correlation between Bitcoin and the S&P 500 has been increasing over the last, call it, since March 25th, so since the end of March, over the last, call it, 2 weeks and change. And this is important because we are seeing equity markets come under a lot of pressure as the Fed continues to signal that it's going to be quite aggressive in raising rates. And this has caused some investors to take risk off the table. So again, this, put a damper on mostly risk assets, but the broad market in general. Now, in terms of volatility, we've seen some interesting trends in Bitcoin's volatility as of recently. Even though, the price has been volatile, it's important to compare it to historical terms. And if we look at the 3-month volatility for Bitcoin, we see that it's actually, it's looking pretty good right now in terms of the realized 3-month volatility. In terms of the overall trend, we see that it continues to make lower highs, and this volatility is getting, more and more, call it squashed down, if you would. Interestingly to note, Bitcoin's volatility is about double that of the Dow Jones index at the moment for the last 3 months. And additionally, we saw that some crypto funds, looking at the flows from some of the large crypto funds, seem to have offloaded some risk ahead of the CPI release. And there was another interesting piece that came out over the weekend, which was this piece from Arthur Hayes. He is the founder of BitMEX, a pretty popular exchange. And he is he's seen as a person that has a really good pulse on Bitcoin and crypto markets. So again, he made actually similar points or interesting points in terms of that correlation between Bitcoin and equity markets, also to make the point that equity markets are about to come under a lot of pressure. And interestingly here, well, the main summary, the TLDR for this piece, and what a lot of people were essentially pointing to once the piece came out, was essentially he sees that as the markets come under pressure, this could cause Bitcoin to visit that $30,000 mark and Ethereum to visit the $2,500 mark. Now, what's interesting about that is that in terms of why he picked 30,000, he claims that it is a gut. But again, I invite you to read the article. But interestingly, this is a trend line that we follow often, as you know. And this is the $30,000 lines up quite perfectly actually with the average price or average purchase price for MicroStrategy's Bitcoin holdings, which is currently sitting at around $30,200 in change. So interesting to have Mr. Hayes come out with this sort of signal, and his view is that this could happen sometime before June, and then the markets could potentially find relief and go upwards from then. But again, interesting piece from Mr. Hayes, and I welcome you all to check it out. Now we're going to get into what we can expect for the week. And as always, we wrap up with what we can expect for the week ahead. This week will give us jobless claims in the US as long as retail sales. These will come out on Thursday, and it'll give investors some additional color on the US economy in terms of unemployment and consumer spending. Worth noting that unemployment is ticking downwards and doing pretty well in the US given the last few reports that actually came out last week or a couple of weeks ago, and the unemployment rate is at 3.6%. So it's already very close to what it was pre-pandemic, which I believe was 3.4%. So we're very close to basically coming all the way back in terms of the health of the labor market. Retail sales will be a different story, and that's what one of the other things the Fed is paying close attention to. We also get to hear from some Fed reps over the week. Cleveland Fed President Loretta Mester will take the stage to talk again about the labor market and how could the status of the job market inform the Fed's next meeting in May. And then we also get University of Michigan preliminary consumer sentiment index. That has been seen to be taking a hit recently with all the stuff that's happening in Ukraine and inflation essentially soaring. Consumer sentiment seems to be getting impacted. And so this will be followed closely by the Fed as things change, of course, around here. Outside of the US, we get central banks in both Canada and New Zealand scheduled to meet, and they will be potentially informing rate decisions there. The investor community or the investment community are expecting both central banks to deliver their largest rate hikes in 20 years amid soaring inflation worldwide. In Canada, that is expected to be a 50 basis points hike. And so we will see what indeed the Bank of Canada decides later this week. Now, what is coming up in terms of U.S. economic data for the week ahead? Tomorrow, Wednesday, 8:30 a.m., we get the Producer Price Index. This is interesting because as we've seen here and talked about, producer price indexes can sometimes be a leading indicator to consumer price indexes. So it would be great to see that starting to roll over, which could appease the Fed potentially and perhaps back it down from such a hawkish view that it has right now. Thursday, as we mentioned, we get initial jobless claims and continuing jobless claims, so a check of the U.S. labor market, as well as retail sales. We also get the University of Michigan Consumer Sentiment Index. That's on Thursday at 10 a.m. And 3 p.m. we get Cleveland Fed President Loretta Mester talking about jobs, and Philadelphia Fed President Patrick Harper speaking at 6 p.m. as well. And on Friday, we just get the Empire State Manufacturing Index. But most of the attention will be focused on what the Fed has to say and the decisions that may come out of the Bank of Canada and New Zealand as well. So as always, we've reached the end of today's show. Thank you so much for watching or reading. If you enjoyed the show, I welcome you to thumbs up it, subscribe it, share it with your friends. And if you don't have a Ledn account, I welcome you to check out Ledn.io and learn how you can start earning the best interest rates on Bitcoin and USDC. The best rates on loans, dollar loans backed by Bitcoin if you need liquidity and don't want to sell your stack. And our most recent product, the Bitcoin Mortgage, which lets you purchase a home as big as your stack. More details at Ledn.io. Thank you, everybody. Have a wonderful day and see you next week.